Well, Jim Chalmers will hold crisis talks with leading economists today as Donald Trump's tariffs continue to wreak havoc on the global economy. To break down what's going on, we are joined now by international supply chain expert David Leaney, live from Darwin. David, good morning to you. OK, so the markets have gone from red to green to red. There is a lot of uncertainty in the global economy thanks to Trump's tariffs. While there is still a bit of whiplash, what does it actually mean for supply chains and for ours specifically?
Yeah, good morning, Sarah. Great to join you. It's a complicated situation because Trump's tariffs really aren't about tariffs. They're a weapon to bully people back to the negotiating table to talk about things that have nothing to do with international trade sometimes. So what it's going to mean for supply chains is disruption. It's going to mean that supply chains will need to adjust and adapt. It's going to mean that people are going to want to trade less with America, which means that usually they'll want to trade a bit more with each other. So it's quite a complicated situation, but it'll certainly be driving up prices and it'll have an impact on supply chains worldwide.
Yeah, I think what you mentioned there, I mean, Trump is the king of distraction, right? Look over here while I do this. But the tariffs, they are having an impact, as we know. I mean, the impact on Australia, relatively low compared to other nations. But what we've seen with the doubling of tariffs in China to 104%, that will have flow-on effects for us, won't it? That'll hurt.
It is going to have an impact because, I mean, tariffs drive up prices. That's what they're supposed to do. The on-paper intent of tariffs is to apply a tax to imports to make local products more attractive, relatively, and to protect local jobs. Of course, that doesn't take into account the fact that countries retaliate, as you mentioned with China, of course, big retaliation against the US. But it does open up opportunities for Australia to trade more with other countries. So more people might want to buy some of our stuff, or they might be offering us some good bargains.
Do you have any faith that Trump is on the right track with what he's trying to achieve here, sort of reinvigorating American industry, making the US wealthy again?
Well, that's assuming that's actually what he's trying to achieve. So without trying to read too much into what he's doing, as I said, they're usually a negotiating tactic. So he claims that tariffs are a tax paid by other countries where the money flows to America. Well, they're not actually paid by other countries, they're paid by companies, and those companies pass those costs on to consumers. And so the people that are going to see the first of the impacts of this are actually the American consumers. I'll give you a really easy example. If an American consumer is used to buying something for $10 because it's cheap import, a big tariff's been put on that and the price has now gone to $15. The other American product they weren't buying might have been $12, so they buy that, right? Good for the American seller, but the consumer is still at a price increase at 20%.
Yeah.
So those sorts of things are going to happen. For us, much smaller impact. We don't get those primary effects, we get the secondary effects. So costs go up for places around the world, and those costs are passed on to us. So we'll see a couple of % increase in prices. We'll also see some disruptions, some things out of stock.
I was going to ask you about that, David, because I want to know what it means for the everyday Aussie, right, and the consumers here on a daily basis. What is the impact? I mean, are you able to break it down more specifically into how much more or less we could be paying for certain goods?
Yeah, certainly. If you think about something like the tariffs that might be paid on steel or aluminium, then things that are made of lots of steel and aluminium, like trucks, get more expensive, transport gets more expensive, so the transport cost associated with moving freight around gets a bit more expensive. So that means the cost of toilet paper or cereal or milk is going to go up just a little bit. For us, 1 or 2%. So it's not anywhere near the 10 or 20% that some places elsewhere in the world are going to see. But it'll also mean that disruption to supply chains and some things being bare on the supermarket shelves occasionally, and it'll seem quite random as to what things will be out of stock for a relatively short period of time. So for the Australian consumer, not so much. People have, of course, seen the impact on their superannuation balance if they've logged in recently.
Well, let's see how long it takes to stabilise, and we're all hoping, of course, for the silver lining in those rate cuts as well, David. Thanks so much for joining us.
Just what we all need, says, a cost of living to cost more.